Hi students, so welcome dito sa ating next discussion for our Unit 1, Partnership. The next is Partnership Operations. So tapos na tayo dun sa Partnership Formation. Meron na akong separate video lecture dun. So I will continue the discussion for Accounting for Partnerships. Okay, so let's start with Partnership Operations. Our focus points for this discussion is to discuss salaries, interest, and bonuses, methods of profit or loss distribution, and bonus computation. Okay? So let's start with discussing salaries, interest, and bonuses. Salaries. Salaries, the partners may agree to pay for salaries. So within the partnership, within the operation of the partnership, the partners may agree to pay salaries to each partner, okay, especially to those entrusted in the management of the business affairs. Okay, and salaries may be fixed or performance-based or based on the results of the operation. It depends on the agreement of the partners on where to base the distribution and payment of salaries. Salary distributions are actually allowed whether there is a loss or a profit. So regardless of the result of the operation of the partnership, whether it is a profit or a loss, if they agree to distribute salaries, then salaries should be distributed among the partners. Okay? Salaries may be accounted for as part of total expenses or charge drawing account of the partners. Okay? The effect is still the same on the total capital account. Although the most common method or most common practice in accounting for distribution of salaries, since we are referring to profit distribution, then salaries should be considered as not as an expense. Rather, it is charged to drawing accounts. Temporarily, they are being charged to drawing accounts and later on will be closed to the capital account. Some other books will present it directly as as an addition or charge to the capital account to increase the capital of uh, the the partner. However, some books present it as charge muna sa drawing, then after drawing, charge it uh, close to the capital account, thereby increasing the capital account. Charge muna sa drawing, then later on, i-charge dun sa uh, capital account. I-close sa capital account. Okay? So, mas common ang pag-charge sa drawing account. Next is interest. Partners may also agree to pay interest other than salaries. Okay? So interests are in form of percentage amount based on capital balances. So this is not the typical interest that we encounter in problem solving when we have in lower accounting. So interest, when we say interest, it is the additional, okay, distribution based on the capital balances in a specific period. Okay? Capital balances of the partners. Interest, okay, similar with salaries, whether the result of the operation of the partnership is a loss or a profit, if they agree to distribute interest, then they can distribute interest. Okay? Interest may be credited directly to capital account or temporarily drawings account, similar with salaries. Okay? But the common practice is that it the partnership accounts it as a charge muna dun sa drawings account, then later on decrease the drawing account by closing it to the uh, capital account, or some other presentation may have it directly charge increase the capital account. Okay, so later on we're going to illustrate it in the problem solving. Last is bonuses. Okay, partners may also agree to pay for bonuses, okay? Especially for managing partners. So of all the partners, hindi naman pwede na all the partners will manage the business. Okay? Commonly, there are those partners that are assigned to manage the business. So they are called managing partners. Practically, those managing partners are yung mga industrial partners who use their expertise in as part of their contribution to the partnership. But it does not necessarily mean that industrial partners lahat. Okay? Common example lang naman. So in consideration, bonuses are in consideration of positive result of operation. And based on the definition, okay, based on what I've said, that it is based on positive result. Therefore, unlike bonuses, and unlike salaries and interest, bonuses are only distributed if and only if the operation is positive, meaning earned income or profit. So if it is a loss, sorry, there is no distribution of bonuses. Okay? So there must be a profit. So there is a common rule: no profit, no bonus, because it is based on the performance and the operation of the result of the operation of the partnership. Okay? Bonuses may be credited, similar with salaries and interest, may be credited directly to capital, or it could be credited to temporarily drawing accounts. It can credit the drawing account of the partner, okay, and it is based on their agreement lang naman. Okay, then crediting to capital to drawing account will result to closing it later on to the capital account, thereby increasing the capital balance of each partner. So mas common yung temporary muna sa drawing account, then charge it close to uh, capital account. Okay? Let's proceed with the methods of profit or loss distribution. So earlier we have an overview of what is salaries, what is interest, and what is bonus, or what are bonuses. Okay, so those three are the common salary distribution in pertaining to partnership operation. Now, we're going to talk about the methods naman. Okay, methods of profit or loss distribution. How do the partners distribute the profit? Okay, mainly the profit, of course. So if there is a loss, they can also distribute the loss. So, but mainly again, profit. But because the goal of the partnership is to earn profit. So according to chapter 2, wow, I have a citation. So chapter 2, article 1797 of the partnership law, okay? The losses and profits shall be distributed in conformity with the agreement. So since we're talking about partnership, we always look into the agreement. Okay? The accounting side only tawag nito, rely, it depend on the agreement of the partners. Okay? If only the share of each partner in the profits has been agreed upon, the share in each in the losses shall be in the same proportion. Anong ibig sabihin niyan? Walang problema on the first statement that the losses and profits shall be distributed in conformity with agreement. So we shall depend or rely on the agreement of the partners. What does it mean by the second statement? If only the share of each partner in the profits had been agreed upon, the share of each in the losses shall be in the same proportion. Ibig sabihin lang yan, if the partners did not agree as to the distribution of the loss because they only focus on the distribution of the profit, should the operation of the partnership resulted to a loss, such loss shall be distributed in accordance if profit had been the result. So meaning, kung loss yan, kung paano i-distribute yung profit, ganun din ang distribution sa loss. Otherwise, if they agree differently in the distribution of the profit and the loss, they may do so. Okay? Again, Tagalog ko na lang, kung ano ang pagka-distribute nila sa profit, tapos walang agreement sa loss, yung loss i-distribute in the same way dun sa profit. Okay? So, the partnership law does not provide as to the specific methods. The only term or the phrase stated there is in conformity with the agreement. So, partnership books or partnership discussion provides for different scenarios on how partners are going to distribute their profits or loss. Okay, so they may agree to have it equally, or using an unequal proportion, or they may use ratios or percentages. Okay, using capital balances, they may use their current capital balance, or they may make ratio or percentages based on their capital balances, or they may agree to have it mixed. There is distribution of salary, then the excess based on the agreement. Or aside from salary, they can have it with interest, then the excess based on the agreement. Or aside from salary and interest, they can add bonus if there is a there's an agreement for bonuses. Okay, with bonus and the excess based on agreement. So how do we apply this in the problem solving? Okay, so let's proceed with first with equal distribution. By the terms self, equal. So equal proportion. So if the partnership, let's have it in the problem solving. So A, B, and C form a partnership. After the first year of operation, the partnership earned a net profit in the amount of 45,000. They agreed that the profits or loss will be divided equally among them. Their capital balances before considering, take note, capital balances before considering net profit are 120,000, 130,000, and 140,000 respectively to A, B, and C. So therefore, there are three partners. They formed partnership. Then after the first year, they earned 45,000 net profit. So if we're going to have it in equal distribution, we can have it three partners. So therefore, 45,000 divided by three partners, we can have 15,000 each. So total still 45. Their capital balances will be increased by 15,000. So for A, B, and C, we can have 15,000 each. Then after distribution of the profit, we can have A, 135,000, A, 120,000 plus 15,000. Then for B, we have 145,000. There's the computation. And for C, we have it 155,000. Okay, so the total of our capital balance before the profit is we have it 390,000. Just check on the computation. I guess it's 390,000, then plus 45,000. It is only it must be equal to 435,000 after considering the profit. Okay, so take note of what is meant by equal distribution. Okay, so our journal entry. Okay, since it is a profit, I hope you have encountered the account income summary or income and expense summary in your basic accounting. So when it comes to accounting for income amounts or income accounts, when preparing for income statement, we actually use a summary account, which is income and expense account, thereby charging everything in that account: expense, losses, revenues, and gains. So if the rule for income and expense summary, if it is credited, if it is a credited, or if it is if it has a credit balance, then there is a net income or net profit. However, if it is debited or has a debit balance, then it means there's a net loss or deficit. So prior to this journal entry, by the way, there must be a previous journal entry providing that the income summary is on a credit side. Okay, but the journal entry that I am presenting now is referring to the profit distribution already. Since there's an income, okay, previous entry should be income summary should have been credited, but because we are already distributing the profit, it is only proper to debit the income summary, then credit the capital accounts of the partners. The partners can agree to have it credited directly to the capital accounts. Okay, directly credited to capital accounts. However, there are majority presentation in the books that they have it as Okay? Credited first to drawing accounts. Okay? It depends on the agreement and the intention of the partners. Okay? Usually, crediting to drawing accounts is in anticipation of profits. So they anticipate profits, or this will lead to the concept of temporary withdrawals. So we are maintaining drawing accounts. So after crediting it to drawing accounts, later on they're going to charge it, okay, close to capital accounts. It's just the same scenario. Parang the previous presentation, diretso credit sa capital account. Dito dumaan muna sa drawing. Then, i-credit naman sa capital account. The effect is that the drawing account with credit balance, pag dinebit, closing to capital account, na-zero out. Yung effect parang the same pa rin if directly charged to capital account. Okay? Next, with a loss. Okay, suppose in the preceding problem, instead of a profit, there is a loss of 69,000. They agreed the profit or loss will be divided equally. So their capital balances before considering net profit or net loss are 120,000, 130, and 140,000 respectively. Okay, so total of 390 before profit or loss. So since it is a loss and we're going to divide it equally, so 69,000 divided by 3, 23,000 each for A, B, and C, respectively. So after the division of the profit, the capital balances of each partner will be decreased by equal amounts of 23,000 each. So for A, after the division of the loss, division of the loss, so we can have 97 for A, then 107 for B, and 117 for C, okay, in thousands. So 390 minus 69,000, we can have it as 321 net total. Okay, so for journal entry purposes, since the result supposed as an assumption is a loss, a previous entry should have been presented is that the income summary or income and expense summary should have been debited to indicate a loss. Okay? What I'm talking about is when you prepare income statement, okay, you are summarizing the expense accounts, then the revenue accounts. You are closing everything, and whichever is whatever is the excess, if it is a credit amount or a debit amount, will depend on the debiting on the income's summary or income or expense summary. So if the income and expense summary is debited, it's a net loss. If credited, it is a net profit. Okay, so after considering distribution of the net loss, we can have it debited directly to the capital account, thereby decreasing the capital accounts. Then credit the income summary to close out the net loss. Okay. However, other books will have it presented as debit first to drawings account, then credit the income summary. This is also dependent or dependent on their agreement and intentions. Okay, so it could be temporary advances. Okay, so drawings debited to drawings, afterwards they can have it debited to capital account. So the debit to drawings and later on credit to drawing account will zero out the balance in the drawing account, thereby yung effect decreasing the capital accounts. Take note, drawing accounts are being closed to capital account regardless of the balance of the drawing account. Okay, it will be closed later on to the capital account. Next is unequal proportion. When we say unequal proportion, by the name itself, the partners will not receive equal distribution of the profit. So let's have it with a profit. So the same problem, however, the only difference is that they agreed that the profit or losses will be divided in the ratio of 2:3:5. Meaning, if we're going to total the ratio, it is 10. So 2/10 is for A, 3/10 is for B, and 5/10 is for C, or 20, 30, 50% in a form of percentage. Okay? So for the, using the agreed ratio, we're going to have interpreted as follows: 2/10, 3/10, and 5/10, or 20%, 30%, 50%, for a total of 100%. Okay, it's up to you how you're going to interpret 2:3:5 ratio. Okay, so that's only my presentation. So the distribution of income based on the percentages that we have arrived: 45,000 times 20%, we have 9,000 for A. Then 45,000 times 30%, we have 13,500 for B. And the excess of 22,500, which is 50% of the 45,000, we can have it for C. So a total of 45,000 no. Okay, then the capital balances after the distribution: A, we have 129,000. B, we have 143,500,000. We have 143,500, and for C, we have 162,500. A total of 435,000. Then for journal entry purposes, to this uh, close the income and expense summary account to the capital accounts, we can have it debited to income summary, then credit directly the distribution to the capital accounts, thereby increasing the capital accounts of each partners. However, again, they can choose to have it credited temporarily to the drawing account, then have it closed later on to the capital accounts of the partners. Okay, they have the same effect on the capital accounts. Next, we have a loss. Have it as a loss. So incur the loss on 69,000. They agreed that the profits or losses will be divided in the ratio of 1:6:3. So therefore, both profits and losses will be distributed or divided among themselves, A, B, and C, in accordance with the ratio 1:6:3. So if we're going to interpret 1:6:3, we can have it 1/10 for A, 6/10 for B, and 3/10 for C. Or 10% for A, 60% for B, 30% for C. Okay, so a total of 100%. So to distribute the loss, 69,000 times 10%, 6,900 for A, then 41,400 for B, then 20,700 for C. Then the capital balances, of course, expect to decrease it with the distribution of the loss. So 113,100 for A, then 88,600 for B. Okay, it decreases significantly because B has greater percentage or ratio when it comes to the distribution of the profit or loss. Since they are the same in the ratio, the profit and loss, so that's the result of the distribution. Okay, higher amount of loss absorption for B. Then for C, we have 119,300 for a total of net total of 321,000. So for the journal entry, we can have it debited directly to the capital account, then close the income summary account by crediting it. Okay, or they can have it charge muna dun sa drawings account, then later on close the drawing account to the capital account, since it's a loss, thereby decreasing the capital balances. Okay. Next, using capital balances. So they're basing the distribution on the balances that they have. So using capital balances will depend again on the agreement, because we can assume different capital balances when it comes to accounting for partnership operations. So they can agree on what type of capital balance they're going to use. Is it original capital investment, meaning the original amount that they've contributed in the partnership, Or they can have it, the beginning capital balances. Beginning capital balances is not, does not necessarily mean the same with original capital investment. Okay. How we're going to differentiate original capital investment and beginning capital balances? If it is the first year of operation, okay, you may consider original capital investment and beginning capital balances as equal amounts. However, succeeding periods or subsequent to the first year of operation, okay, or meaning the second year, starting the second year of operation, the original capital investment and the beginning capital balance will no longer be the same because of the transaction that is affecting already the capital balances, crediting the capital balance for the profit or additional investment, debiting the capital balance for the loss or temporary withdrawal or permanent withdrawal. So it will affect the balance of the uh, investment. Okay, so just take note of the difference, okay, on how to differentiate original capital investment to beginning capital balances. They will have equal amounts if it is the first year of operation. Okay, otherwise if it is the succeeding years, expect a different amount of beginning balances from the original capital investment. Next, we can have ending capital balances before profit or loss adjustment, meaning it is the ending balance before considering profit or losses. Of course, we are distributing the profit. How can we distribute profit using capital balances after profit or loss adjustment kung hindi pa na-distribute yung profit? Okay? So, the capital balance, always take note, the capital balance must be before profit or loss adjustment. Okay? Then we can have average capital balance. Average capital balance, later on, we can discuss simple average and weighted average. There's no so much explanation with simple average because it is only like 1 plus 1 over 2. Parang ganun lang. Or beginning balance plus ending balance over 2, you can arrive the simple average. But for the weighted average, we use a different method. Okay? So later, we're going to apply it with problem solving. So let's start first with this problem. A, B, and C form a partnership. After the first year of operation, the partnership earned net profit, still 45,000. They agreed, this is the important statement, they agreed to divide the profits or losses using their capital balances. So they agreed to have it for capital balances, but they did not specify on what capital balance. So we're go later on expect to have different assumptions. But for specific problem solving in the book, okay, if you encounter problems, it will specifically state what type of capital balance going to use for profit or loss distribution. Okay, for this illustration, for this example, wala munang statement. We're going to have it later, different assumptions. Okay? So, you're given there, the capital balances, original capital balances, meaning the original investment, are 120,000, 130,000, and 150,000 respectively. Then to continue, the movement in the capital balances of the partners during the first year before considering profits or losses were as follows. So yung original investment or yung original capital balances, 120,000, 130, and 150,000 respectively sa partners, nagkaroon daw ng movement. So there are investment, there are withdrawal, and investment and withdrawal within the year. Then considering those movements, we can already have the ending or final balances before considering the profits or losses. So for A, 120,000 original, or we can assume it is the beginning balance for since it is the first year of operation. Then ending balance is 170,000. For B, 130, and ending balance 145. Then for C, we have it 150 original and 185 for ending. So let's start with first assumption, original capital investment, meaning we're going to assume the original capital investment, 120,000, 130,000, and 150,000. My way of interpreting the proportions for this one is to make fractions out of the initials of the amount. So 120 total first, the original capital investment, we can have 400,000 in total. Okay? Then have it as 120, the first initials of the amounts, 120 over 400, 130 over 400, or 150 over 400 respectively, fractions respectively for A, B, and C. Or we can interpret it for A, 30%, for B, 32.5%, and for C, 37.5%, for a total of 100%. Okay, it should always be 100 based. So for the distribution based on the ratio or the percentages that we have, so for A, uh, we can have 13,500, 30% of the 45,000 profit. For B, we can have 14,625. Okay, kindly check the computation na lang. Then for C, we can have 16,875,000. Okay, then after the capital distribution, the profit distribution, the capital balances, for A, it is 133,500. For B, it is 144,625. And for C, 156,875, for a total of 435,000. Okay? So, income summary, the journal entry is to debit. Uh, Income summary, 45,000. Then, credit to, wait, I have noticed something. Mhm. So, I guess this must be, isa na yan. Malayo na pala yung dating natin. Isa na yun. This should be 170 pala, no? Then, this should be, ayan, may mali.